and get us started right at 9:30 today. We have quite a bit that we're going to go over, considering that we're talking about two topics: fundraising and financial management. And so we're so glad that you're joining us for our fourth class today. We are almost done. We have one more left in our um, Institute for this year. So we thank you so much for joining us this morning. So with that, I want to go ahead and jump right into our slides. Leslie, if you wouldn't mind advancing us there, and then we'll go ahead and get started with our introductions and a few information, a few notes that we'd like to share with you. Again, we do want to welcome you from behalf of the North Carolina Center for Nonprofits. On behalf of our president and CEO, Jean Tedrow, who has joined us for today, along with myself. Last week, we had a special guest, and again, I was highlighting our partnership with High Point University and how High Point University is an institute that focuses on the one about nonprofit management within their schools. And we have a representative today that I'd like to introduce you all to, that would like to share a few words with you on behalf of the university. So Dr. David Bergen, thank you so much for joining us today, and thank you for your time and sharing your insights with us.
Well, good morning, and I'm honored to be here. Um, Last week we had a little bit of technology issues, but we've resolved that. I'm so proud to welcome everybody from the campus of High Point University. Again, my name is David Bergen. I am a professor here and department chair and coordinate a Bernard Family Leadership Fund that works with leadership education of college students, both in for-profit and nonprofit sectors. High Point University proudly has the oldest undergraduate nonprofit program in the United States. And so I'm very proud to be part of that. The academic program really embodies the university's commitment and really the sector's overarching impact on our communities and individuals. And I know it sounds cliche, but of making the world a better place. I'm really honored to also acknowledge over 20 years of service of Dr. Palmer, who is our facilitator today. She was professor and director of the nonprofit program and has increased the capacity of hundreds and hundreds of students who serve in nonprofit leadership roles across North Carolina and across the United States. Through our partnerships with the Guilford Nonprofit Consortium and the North Carolina Center for Nonprofits, we've hosted a number of diverse education capacity building opportunities. And I'm really proud to welcome everybody and express good morning. So thank you for allowing me to make a few comments.
Thank you so much, Dr. Bergen. And I also want to note, we hope that we can continue on the leadership lecture series partnership with the North Carolina Center for Nonprofits, and hope that all of you will stay tuned for upcoming collaborations that we have, and feel free to join in on the wonderful panels that we've had two thus far. So thank you so much for highlighting nonprofits all across our state, but particularly in the High Point community in Guilford County. I also wanted to just make a special acknowledgement. I have one of my colleagues here from the North Carolina Center for Nonprofits. She's joining us, Tracy Curiette, who is the center's CFO and COO. So she helps to manage all of our finances and keep things in order. So thank you so much, Tracy, for joining us. And feel free to chime in with any insights and also tools and resources that the center utilizes as well as we're navigating our finances too. And feel free to share that context. So yes, Tracy is one of our rock stars, Jean. Thank you for adding that. So with that, let's go ahead and move forward. Again, as we've mentioned before, we want to continue to highlight and also thank our partners and sponsors. Again, High Point University, the Guilford Nonprofit Consortium for making this happen and success thus far, and also the Triangle Community Foundation. We appreciate your support of the Nonprofit Management Institute. Okay, so I wanted to go over our really it kind of full agenda for today, and then I'll turn it over to Dr. Palmer. As always, we're going to take some time to do a few introductions within breakout groups. We are going to provide opportunity for a review and reflection of session 3. We will be talking about financial management and then the subsequent bullets underneath, as well as fundraising, and then we'll also close out with our sharing our session evaluation and any closing remarks. So with that, I'm going to take a moment to pass it over to our facilitator, Dr. Palmer. We thank you so much for your time and insights, and I really enjoyed all the great things that we learned on last week in regards to strategic planning. It was really insightful and helped to refresh some things from to my learning as well and remembrance as well. So thank you so much um, um, for that session as well. And I'm looking forward to as much information on this time as well. So with that, Dr. Palmer.
Thank you, Salima. Good morning, everyone, and welcome back. This is our fourth session, and we have one more to go, and it'll be graduation. If I could get a gallery view, that would be great. We're going to do introductions and in a breakout session this morning, and I hope you all are doing well and all is well in your community or in your county. You're a part of the state. In our breakout this morning, we're going to focus on our first topic for today. So we're going to start with financial management, and we're going to end with fundraising. And so in your breakout sessions, what we would like for you to do is we would like for you to share in your group how you've pivoted in the wake of COVID-19 as it relates to financing and supporting your nonprofit financially and or fundraising. So we'd like for you to share how you've pivoted. What kinds of things have you had to do in order for your nonprofit to continue to do the work that it has been doing thus far? And then also, as a part of that conversation, if you would share what your biggest fear is, biggest fear as an individual and biggest fear as it relates to financing your nonprofit. So Rebecca is going to move you all into a breakout room. Good morning.
Good morning. Yeah, here we go. And how many minutes would you like for this, Dr. Palmer?
We'll gauge it around 3 to 5, and they'll get a 1-minute warning like you normally do. So we'll see.
Sounds
Since
good.
I added one more thing to the breakout.
All right, here we go.
Uh-huh.
Right.
All righty.
All right, we're back.
Are we all back? All right. Thank you, everyone. So I did kind of ask you several things to do in the breakouts. Of course, one was to share with us how you have pivoted from a financial and fundraising perspective. And then also, what is your biggest fear related to that in your nonprofit? Because that's a very real life reality that we experience, especially for some of you who are on the call and you're executive directors or presidents and CEOs, and you're responsible for making sure that resources are coming in the form of dollars and not necessarily assets or tangible assets. So we know that is something that is ever present for those folks who are responsible for keeping the lights on, so to speak. And then we also asked you to share some of your individual fears, as we try to learn a little bit about how to think about financing our nonprofits and also raising funds. Is there a group that would like to kind of give us just a general, let's hear from two, because we have several reflection and review items that I want to give back to you that you requested. So could we just have a couple? You can definitely put feedback in the chat, and that way we can see more of what was discussed. Do we have a volunteer?
I can say my name is Emma. Hi. I
Hi,
am
Emma.
with Casa Tia Emma in Emin Hill, North Carolina. One of the things that when I first began, our organization is very small, and we were beginning from home. I started as a group for 12 years old to 18 girls from high school, middle school going into high school. And one of the things that I find challenging was that I was renting a building and using my non-financial assistant for provide services for the people that were in need, the young girls. Um, when COVID came, I couldn't go out and do a lot of resources, and working by myself, not having a lot of people to help, just a few parents that were assisting me as volunteers was very bad. And the girls stopped coming. So that was a very bad situation for the COVID. So we now do Zoom meetings, Zoom classes, and we do also outdoor gardening, and we try to find leadership kind of programs that will develop their skill. So that was finding the resources is less, but it helped. And I went back home again because I couldn't continue
Wow.
paying for the building.
And so you had to let the building go. That's what
Yeah,
I'm understanding.
and working from my home and do the Zoom classes and activities and using the YMCA and other programs that are there available, the donation on people that are helping, like the other organization within the group, that it's been a very, very excellent idea.
Okay. Thank you
And
so
the
much for
resources,
sharing.
yeah,
Thank you for sharing.
you're welcome.
Got some other ones that have come through on the chat as well. From Sarah, some concern about funding and finances, relying heavily on government funding right now. From Lynn, apply for every grant you can. Mass appeal for funds. Sarah, the needs in our communities have grown, but unsure if the financials will be there to support the need. Asking funders, from Katina, asking funders to ease restrictions on grants to areas of greatest need. That's a good pivot. And from Jillian, a concern of ours is that partners went with the modified sponsorships for events and programs this year, but as COVID continues, not sure if they will continue with modified benefits in 2021. So looking ahead and thinking about what the future looks like for fundraising for sure. And then another one here from Corey. Group 8 did a lot of pivoting, listening to audiences, connecting via social media, et cetera. Yeah, we've seen a lot of groups, organizations increase communications in this time, right? Where we're all separate and we're all in our own silos, so increasing communication. And Jackie had a great idea, raising money $1 at a time via social media, et cetera. $1 million, $1 donations equals a goal. That's a big goal. Greatest fear is fundraising and asking for money. So we've got a fear there that's come up, that asking for money is a big fear, and we hear that a lot.
Okay, is there any other group that would like to share in addition to what Rebecca has shared in the chat? Is there another group?
I was willing to share. I think our group had some things we didn't get through with everyone sharing, but I think we were talking through some of the same things, being just trying to shift our models. There's a couple things about I shared needing to go virtual. I was responsible for fundraising at my organization prior to the role I'm in now, and one of the biggest things that I have learned this year is, aside from being nimble and going virtual, is the value of partnerships. And we are doing something kind of different this year for our biggest fundraising event of the year, which is typically our run walk that we have every fall, winter. And instead of just going for a virtual run walk, we reached out to our city partnerships and are partnering with our Parks and Rec department, our local Parks and Rec department, and will be partnering with Greensboro Parks and Rec to really push it out for a whole fall campaign around some of our common interests, which are health and equity. And so as we do that, more people can learn about our organization, and then lead into our walk run as a week-long event instead of a one-day event, and keep that social distancing factor. And that way people can spread out, and we actually aren't having to do the overhead cost of renting a venue either. And so we're avoiding some of the overhead cost, getting a larger audience, and hoping to really engage actually more people than we would normally, because we boosted our platform to a lot more folks. So that was just trying to be creative through partnership, and it was kind of my biggest lesson that I learned.
I can share really quick that we are just coming out of our biggest fundraiser of the year. We did a really big pivot and ended up hosting our event semi-virtually. So this is what is normally a big, not quite a gala, but a big party. And we ended up doing a small distance dinner for with some bigger donors and board members on site. And then we had many folks organized in little pods, tuning in virtually via Zoom. And it was a lot of work, more than I think any of us realized. We normally have a silent and live auction, and we used an online platform for that. We edited lots of pre-recorded interviews to have videos playing throughout the night. We popped in and out of different pods to try and keep everybody connected. And it went, I think, as well as it could, minus some technical hiccups. But I will say that from the fundraising perspective, it was not what we see in past years. So we are now going to debrief at this was just this weekend. So we're trying to weigh how much of this was just doing things differently, that it was virtual, that it was an online auction and not the, the fervor of the live event, or was COVID and just different spending habits an impact. So it's hard, I think, when we're evaluating some of these pivots to tease out from all of these various factors what is making the big difference. Did we just not do a good job of communicating the virtual stuff, or was it the spending habits? And we did absolutely everything perfectly, and it was going to end up this way anyway. So I think be kind to yourself when you are trying to evaluate this, because there are a lot of variables, and probably hidden variables, that we haven't even figured out yet.
Yes. Thank you, Jen. What an awesome way for me to transition into what our topic is all about. Evaluating where you are and making adjustments. That's not new to nonprofit professionals and stakeholders. We were pivoting before COVID, and we continue to pivot in the wake of COVID. So there is, there are some things that maybe we could have avoided if we had a different financial management strategy, but then maybe not, Jen's point. So I think that just kind of checking in and focusing on kind of what actually is impacting your ability to raise funds, and or impacting your ability to implement your overall financial management strategy and way of thinking about and managing the finances of your nonprofit. So thank you, everybody, for your feedback. If you could, real quickly in the chat, give us an indication of what your biggest individual fear is. So we'll do that just in the chat. I won't get audio, I won't get verbal feedback from that. So what is your biggest fear? And then we're gonna move kind of somewhat quickly on to our to the focus of our session today.
So as they're coming in, Jackie mentions the ask. Keenan said another 4 years of Donald Trump. Corey says failing to keep us afloat. We worked so hard for 2 years to
Mhm.
recover from crises. Adriana, that I am missing an opportunity, a grant, a donor, a somebody for my organization. Catherine mentions the pivot to all digital engagement may leave behind the older generation among our member base and folks with disabilities. Good point. Shauna says that as a new ED, I will miss opportunities for direct connect stewardship with key donors. Matt mentioned that the pandemic will stretch until 2021, causing long term disruption to programs and events. Jen mentioned exhausting our limited donor pool with over communication. And then I'll end with this last one here, and we have several more in the chat that are populating. Valerie, outside threats to the core of our work of educational equity in higher ed, funding streams are drying up. Yes, and all very
Yes.
true concerns.
And definitely, you know, we're hearing from our public health professionals that the coronavirus is officially have been announced as being airborne. So, you know, I think I saw something in the chat related. I'm thinking that's what that was related to, in terms of everyone just trying to be safe and so on and so forth. Um, I'm going to echo what Jen said, and that is, don't be too hard on yourself. You know, do the best that you can possibly do. There are some experiences that we're having that we have to work through as it relates to pivoting, as it relates to how we manage our finances, and then also in terms of fundraising. But as I mentioned before, as nonprofit professionals and stakeholders, we're pros at that. We've been pivoting a lot over the, or you have, and I have, over the life of the nonprofits that we are affiliated with and that we represent. So we should be encouraged in that we do have that skill set to kind of to get us moving and making decisions about adjustments. So I thought also in terms of my biggest fear, and I think I saw this in the chat, as it relates to financing our small grassroots nonprofit that I lead here in Guilford County. We have a quarter-time, really, office, quarter-time, part-time, but there are individuals who are compensated through that work that we do. And my concern is that their compensation, we not be able to meet our obligations in terms of paying them, and also maybe actually having to let people go. No one wants to have to tell someone they no longer have a job. And I think that is probably one of my biggest. On an individual level, I'm going to share something that's more practical. And that is one of my biggest fears is I'm afraid of the dark. Every time I think I've gotten over it, it shows up. So, and what I try to do with this fear related to compensating the individuals that work with us, what I do, trying to practice the same thing I do whenever I find myself in a dark place and I'm afraid or I start to feel fearful. I remind myself that I've made it through several times of being fearful of the dark. So I say we just have to kind of practice those things that we know that work. And again, not being too hard on ourselves when it just doesn't work out the way that we had hoped, be it that fundraiser and the dollar amount you wanted to raise, be it that grant opportunity that you missed or didn't get. Just remember, you know, we just have to kind of keep moving and keep going and not let that defeat us. So kind of moving into our next, if we could go to the PowerPoint, kind of transitioning into, so this is our capacity building framework, and you have all of this, but we just kind of like to show it as we kind of go through each session, just reminding you that the North Carolina Center for Nonprofits does have a capacity building framework that we operate from, and that this experience, the Nonprofit Management Institute, is based on that. We do have our principles and practices guide, and as you know, we are working through 5, 6 of those topics in this experience. And in terms of our review and reflection, we're going to share with you in the chat a link to a community needs assessment resource. Some of you asked for that. We're also going to put in the chat an asset mapping toolkit resource, a link for you. We're going to share that with you also in the chat. And Leslie, if you could take us to the mission review. We also included that. We're going to attach that in the chat as well. So what we do is we debrief after we finish a session, and we look at what you shared and the kinds of things that you've asked for. And we try to bring that back to you in the next session or in the wraparound information. So I'm not gonna train on this, but I just wanted you to kind of see what we have. Some of you asked about how do you write a mission statement? And so we incorporated this. I do believe there's a source at the bottom of this, Leslie. If we, I think we included that. If we don't have it here, we will. So there's a source here that you can refer to as well to just kind of help you with that. So that was a question that was asked. Also, we're going to we have in the chat a link to a goal, an action step, and an outcome statement. And what we did is we reworked the worksheet that we provided for you based on the question that was asked. And Leslie, if you could show those. So we have an example A and an example B, and I'll just kind of talk you through it, and then she'll pull it up and show you. I think the question last time was the goal and the action step and the outcome statement that was in the training last week was more about here it is. So what we did is we reworked it and just set it up differently. And so there's the goal statement, there are the action steps to go with that goal statement, and then the outcome statement to match it. And so that was the goal that we set up that we shared last time. Just rework the worksheet for you. So hope that helps to kind of see that in the sequential kind of order in which I facilitated that information. And then I want, Leslie, if you would go to example B. I'm trying to remember who asked the question related to maybe a goal statement that was more about service delivery, or maybe an actual program where we might be actually helping or serving our stakeholders or constituents. So what I did is I just went back and just created a goal statement that was more around a program, and then there's some action steps there, and then there's an outcome statement to go with it. So I'm going to stop there with this particular one. Are there any questions now about the goal, action steps, and outcome statement? And the reason I'm coming back to this and spending just a little bit of time, this is really the heart of a strategic plan. You know, what your goals are, how you're going to go about accomplishing those goals, and why is it that you're trying to accomplish what it is that you've laid out. So hopefully this will help in terms of just kind of seeing it a different way. We just thought reworking this would make for a better presentation of that information. And I'm just going to pause there. And if we could go back to the gallery view and just see if anyone comment. Again, I won't stay here long, but this is such an important part. And remember, our goal statements, our action steps, and our outcome statements can be SMART, right? That acronym SMART, specific, measurable, et cetera, realistic, time bound, or having some type of time frame associated with it. And I'm gonna kind of stop there. Any questions? And does that help? I see heads nodding yes. Okay, good.
You can go ahead and use those reactions down below, if you will. Thumbs up there, I see it. Good job, Jackie. You can use that thumbs up or
Great.
the clapping.
Awesome. Okay, all right. So again, hopefully this will help you to just kind of have somewhat of a worksheet, and just keeping in mind that some of our goals in a strategic plan are more organizational, and some are more around programming. And so we just wanted to make sure that you had that once that question came up. And then the other thing we wanted to, or at least I just wanted to get a sense from you. So we're about to move into 2021. And I just want you to kind of share in the chat, if you would, just kind of yes or no. What are your thoughts about virtual board retreats? And do you think that might be something that your nonprofit would be interested in next year? So board retreats. I just want to kind of get a sense for that, because as you're planning, if your board is like our board at our agency, you know, COVID has really, we've been able to do communication via Zoom, but actually getting together has been difficult. So, you know, we may not have a choice but to continue with virtual board meetings. I know some of the nonprofits are going back to in-person board meetings, but some are choosing not to. And so I just wanted to get a sense about if there was an opportunity for a virtual board retreat, would your nonprofit be interested in doing that? Okay, let's see. Any other questions about last week or comments about what I've just shared? Because we're going to transition into financial management. Great. I see the comments coming in around the virtual board retreat. Thank you so much. We'll have these notations for us to just think about that. Okay, all right, so let's just do an arm stretch, because we're getting ready to talk about financial management. And you were sent, I know sometimes if I just kind of stretch, it gives me a different level of energy. So we're going to be reviewing some documents. Leslie, if you would just show the financial management handouts sheet that has where all of our information is. Once finished with financial management, we'll take a break and then we'll go into fundraising, but I'm gonna kind of move us ahead here. So this would have been in the link, just this sheet to kind of tell you what we're gonna talk about today. So we've got 5 different pieces of information that I want to highlight specifically. One is a budget template that is in your information. The financial statements that we're going to refer to, what we are using, I'm using kind of a case study approach today with that. You actually have a link to a full audit report, but we're going to focus on pages 4 through 9 only, and pages 4 through 9 not as numbered in the document, because it's a PDF, but in terms of if you were printing this, we just put a note in there for you to have printed 4 through 9. We're going to look at these 4 statements: the financial position, activities, cash flows, and functional expenses. If you've printed this off, you might want to use a highlighter, I don't know, but we're going to be showing these pages And I'm going to point out certain pieces of information just to help us to understand the purpose of these reports and how these reports might be used by your nonprofit. We're going to do a quick just view of the 990 form. We're going to do that. We're also going to look at an annual report, and then we have a handout that we're going to share with you. And Leslie, I can't remember if we put that in there or not, but either way, we're going to look at that handout, and then we'll be finished with financial management and take the break. So let's see. If you would, the organization that we're going to utilize as a case study is an organization based in Massachusetts. It's a Big Brothers Big Sisters organization. So on their website, they have all of their, I think for the last maybe 7 years, they have their audit report, they have their annual report, and they have their 990. So they have all of their information on their site. So it's accessible to the general public, and you can, access this information most anytime. One of the things that's important as we think about financial management is to remember that we should be diversifying where our dollars are coming from. So in diversifying where our dollars are coming from, and Leslie, if you would go to the PowerPoint, to the financial management slide. So this is how we're going to break down what we are learning today, or how I've broken down what we're learning today. So financial transactions, we're going to pay attention to those statements that I mentioned. Internal controls and audits and what that means, and diversification of revenue. We're gonna talk about that. Now, most of our nonprofits, you can go ahead to the next slide. Most of our nonprofits have financial guidelines and policies. And if you're fortunate enough to have a person whose job it is to manage the finances internally, then they typically know what these guidelines and policies are. And we do have, as a part of our session today, kind of listening in with us, the North Carolina Center for Nonprofits Chief Financial Officer. And so most of our nonprofits have some guidelines or some policies that they are following. It may be that individual whose responsibility that is kind of manages that and helps us all to adhere to those. But they also may be working with an accounting firm, or there may be a CPA that the nonprofit has secured to also support that work. Well, there's some specific duties and responsibilities in terms of how do we keep up and manage our financial transactions related to revenues and related to expenses, in terms of budgeting, those reports that I talked about, the 990 annual report, and then the audit and the auditor's report. And then we're going to speak about the generally accepted accounting principles that's a part of an association called FASB, that is the kind of go-to entity for accountants in terms of principles and practices as it relates to accounting. So this is kind of our focus. We're going to spend some time reviewing these documents. So Leslie, if you could take us to the budgeting worksheet. And I'm going to pause as we go through each of these, because if you have questions and that type of thing, we want you to be able to ask those. And if there's a question that you have that Tracy might be able to give a little insight from the North Carolina Center for Nonprofits, then that would be great as well. So Tracy, at any point, if you want to jump in, please feel free to do so if there's something you think that our participants need to know. that you would be aware of in your Chief Financial Officer role with the center. So we're not going to spend as much time on budget, but practically the budget shows us what we're budgeting for in terms of revenue, and these are line items that are typically typical for a nonprofit. And then also the budget is going to show the expenses. Oftentimes we start with the current budget that the nonprofit has, and then we begin to think about what the kind of what our previous budgets were, and begin to do a comparison and determine what those numbers are going to be. So in terms of budgeting, we provided this worksheet in this fashion. Is there any general questions about budget? And that could be either verbally or in the chat.
Dr. Palmer, this is Tracy. I don't have a question, but another piece that might be helpful for folks to think about is if you use, if you have an accounting system where you're helping track this, one thing that we've started doing, and we use QuickBooks, is breaking our budget down for the year by month. So looking at revenue coming in, expenses is going out, and you can put that into your accounting system, and then you can get some really easy reports with just a click of a button, comparing your actuals to your budget for the year, so you can see how you're doing and what goals you're meeting, and if you've gone over in any areas. And that's been a helpful report for us to share with our leadership team and our full staff actually during our monthly staff meetings, just to help monitor, especially during this time with COVID when there's a lot of challenges going on.
And there is an agreement there, Tracy, with you from, I think is it Corey? Let's see. Yeah. Saying that that's something that they have done also. Thank you so much for sharing that with us. Thank you. And so we're going to move into looking at the statement of financial position. And so this can be found in the link that we just highlighted earlier. It can be found, but we're going to show it on the screen so that you can keep up with us that way. And I don't mind if you interrupt me, as we're going over this. I know that some of us who serve on boards, sometimes we get the financials and we sometimes don't necessarily understand what we're reviewing. And sometimes board members are hesitant to ask questions. And so, we want to create a space for your board members in particular, if they have questions about some of the financial reports that you're sharing, that they have the opportunity to pose those questions and feel comfortable doing so. So basically what we want to highlight here is we want to express to each of you that these are all different types of reports for different reasons. They serve different purposes. Every nonprofit, let's just say at a board meeting, decides what type of reporting it's going to do. So your question might be, well, what should we absolutely share at a board meeting? That does need to happen with your executive director, with your treasurer, if you have a treasurer of your board, if you have a finance committee. That's where those decisions are made in terms of what you're actually sharing. If you're using a data system or software like QuickBooks, it will help generate various types of reporting. And so you have to decide what is most important and the way in which you want to report this information out. So Leslie is going to use, she's going to be drawing on this, on the document for us as I'm talking about these different items. I'm not going to talk about every single item, And again, Tracy, feel free to jump right in as we're going through these. So the first is the statement of financial position. And basically here, what we're doing is we're looking at, this report has, or this document has 2 sections. It highlights the assets, and if you go to the second page, Leslie, just real quick, it also highlights the liabilities and net assets. And so, so this is for a Big Brothers Big Sisters organization, and it highlights all of these different pieces of information. The other thing you want to keep in mind about the financial position, the statement of financial position, it tells us in terms of assets what we own, OWN, and what is owed, OWED. So what is owned, the assets, and what is owed, the liabilities. And it also helps us to see the difference between what is owned and what is owed. And so that is specifically what, you know, you can gather from here. A couple things I want to point out is the cash and cash equivalents in this document. So we're looking to see how much cash we have, and then also what do we have that is readily convertible to cash. And so that's an indication of the assets there. Grants receivable is something that would be important in terms of knowing what grants do we have where we are still receiving dollars in to the organization. And then of course, some things that just kind of make sense, like your contributions receivable. So you may have some contributions that have not come in yet, maybe through a pledge program or something like that. Tracy, I don't know if you want to make a comment about this section or not before I go to liabilities.
No, I think you did a good job doing a high-level overview of the statement. Yeah, thank you.
Okay, okay, perfect, thank you. And then, so go to the next page, Leslie. So in terms of the liabilities, so again, this particular statement or document tells us what we own and what we owe. And so here is some of what our liabilities might be. So you see accounts payable there in terms of that. Another a piece of information that you want to pay attention to, which I think a lot of us get concerned about, are what we call the net assets in terms of those unrestricted versus temporarily restricted and permanently restricted assets. So that's another kind of piece of information that's important for us to pay attention to. So Tracy, do you want to talk a little bit about unrestricted, the temporary and permanent?
Sure.
I mean, I can do that, but you're a CFO, so yeah.
Share some, and then if there's something you wanted to hit on that I miss, you can wrap that back up. So this statement is familiar to what the center has, or similar. So we have unrestricted net assets that are that a portion of that is board designated. And so we call that our operating contingency fund. It's like our reserve savings that we try to tuck away for situations like this that would require some sort of board action to use more than a particular amount of that. And so it's broken out unrestricted, meaning, you know, it can be used for anything. There's no restriction on it in terms of a contribution or a grant for a special program that you've received. Those things would show up in your temporarily restricted line. So if you get a grant for a specific project that has a restriction on it, that would show up there until it's released from restriction. And then permanently restricted is usually things like an endowment. So the center has a small endowment that's considered permanently restricted. So the principal of that cannot be used. And so that's what you typically would see show up in permanently restricted.
Thank you. We're going to move on to our statement of activities unless someone has a question.
I think we have, this is Rebecca here. I think we have a question that came in from Beth Morrison. Can you go over the different types of accounting, cash tax accrual, modified accrual?
You want me to take that question, Dr.
Yep.
Palmer? Sure.
Yes, please.
So very, very high level, I think, and we actually do both of these at the center because for the types of revenue and expenses that we have within our organization, it's something that makes sense to us. So we actually budget on a cash basis. So we're looking at revenue and expense that's coming in and out during the year. And that is available for use during the year. On the accrual basis, which is what our audit is done on, that's where you're going to look at things. You're going to record revenue when it's awarded, not necessarily when it's received. So that's where on the first part of this statement where you see things like grants and contributions receivable, you would have things show up there that maybe were not received at the end of the year, but they were awarded to your organization. It also comes into play when you have deferred revenue. So when we have, for those of you who are familiar with the center, with membership and with our annual conference, if we open registration in the fiscal year prior to when the conference actually takes place, that would be considered deferred revenue. So you're actually going to defer it into the year where the event is actually happening. So when we prepare reports for our board, we do an accrual basis report that really comes directly out of our QuickBooks accounting system. And then we do a cash report that shows our budget and year-to-date comparisons. And then and some people do modify it as well, which is kind of a combination of that. So if you have a multi-year grant, for example, on an accrual basis, you would record the whole thing when it was awarded. But on your cash basis, when you're budgeting, you might take each payment that's coming in for that year and put it in that year's budget. So that's kind of a high level overview, I think, of the differences. So if anyone has any comments to add there or help explain, I would welcome them as well.
Thank you, Tracy. And we have 3 more statements that we're going to take a look at. So Leslie, if you could go to the statements of activities. And the statement of activities is highlighting 3 things for us. Yes. And in this report, they have 2 different, well, that's for statement of functional expenses. But anyway, statement of activities. So this is, they're actually showing a comparison of the 2018 year and the 2017 year. But in terms of the purpose of this particular statement, it shares with us 3 pieces of information. It helps us to evaluate our fiscal performance because, as you can see, it has revenues and other support. And then it's categorized by, which is why I wanted Tracy to explain the unrestricted, the temp restricted, and the perm restricted. But it highlights the revenues and other support and gives us a total there, a net, and then a total. And then it also highlights expenses, non-operating activity, and then of course, it gives us the ending net assets. And so it helps us evaluate fiscal performance. It helps us assess the ability to continue services because we're into, our nonprofits are delivering programs and services. And it also helps us to evaluate our stewardship. So, you know, just looking at the report in terms of numbers and line items isn't necessarily the way in which we need to digest this. We have to be analytical in our thinking as we're reviewing these statements. So we just looked at the previous report. you could take that report and now compare it to what we see in the statement of activities. So these reports, while they stand alone and they're on different pieces of paper, right? They actually are connected. And so it's important to think this way when you're reviewing a financial statement. Review it as an individual document and a piece of reporting out about finances, but you also have to think about it, coupling it with those other statements. Tracy, I'm gonna let you share any thoughts you have there.
Yeah, just a couple of things on this. Sometimes, depending on the organization, under expenses, you might see program services broken out by the specific programs within the organization, or summarized like they are here. That's probably just a preference thing, but just to mention that. And then, as Dr. Palmer was saying, they definitely tie into each other, and it's important to be looking at all of these statements when you're looking at the financial position of an organization. For example, if you look at the change in net assets, that feeds directly back into the statement we were just looking at. I call it the balance sheet, but you can see from year to year if your unrestricted net assets would go up or down, and it feeds directly from this statement. The same with temporarily and permanently restricted assets.
And in this particular report, again, it's showing what took place in 2017, and also it's showing, for 2018 as well. And sometimes these reports will have a comparison. They may have multiple years in terms of showing that. Are there any questions that we need to share? And one note for this particular report for me, this is just my opinion. I think this is a good report to share with the board, like at a board meeting, because it does help you understand the overall stewardship of the dollars that are coming in to the nonprofit organization. So, and again, it's the preference of your nonprofit as to what type of reporting that takes place. But I encourage this particular this particular report. I don't know, Tracy, if you have an opinion about that or not.
Yeah, absolutely. This one is definitely showing you money coming in and going out. So it's an important one to be able to share and make sure that your board understands, because they can see what's happening. This isn't an audit, so it's when your year is completed, but you can show this throughout the year and do a comparison to your budget as well, so that they can see how things are going for the year.
Rebecca, I saw you. Was there a question or something in the chat?
I was popping in. We had a great comment, I think, from Adriana. She's saying that she's always thought it's important to give the board a high-level look, but pull out a few mid-level pieces as well. I thought this was interesting. Financials always in all caps, take our board into the weeds, right? That's good. That means your board members are taking their fiduciary responsibility seriously. She said that she always likes to provide visuals as well, a few graphs and charts, right? So thank you for sharing that, Adriana. And then a question from Sarah. Do you have time to explain realized and unrealized gains?
Tracy, I'm gonna let you respond to that.
Yeah, that's something that actually, if I could respond to that afterwards, perhaps find some resources to share with Sarah.
Sure.
I think that would be good. I'll make a note of that.
And just for clarity for me, Sarah, are you talking profit when you say gains? Help me to understand where I'm assuming that's what you mean, but.
Referring to under the non-operating activities and net realized and unrealized gains, losses on investments.
Oh, yes, on the investments. Okay, all right, okay.
Thank you.
Thank you, Tracy. So we're gonna move to the cash flows, the statement of cash flows. You can go ahead past that one, Leslie, and we're going to come back to that. I just kind of keep going. Yep. Here we go. So the statement of cash flow. So what are we looking at here? We're looking at the nonprofit's ability to generate future cash. And we're also looking at the organization's ability to meet the current financial obligations. We can also see the difference in between cash receipts and payments. So this is divided into operating activities, investing activities, financing activities, and then the ending is our cash and cash equivalents. Remember in the financial position, the statement of financial position, we saw the cash and cash equivalents, meaning those items that are readily convertible to cash. And we can see if there's any type of change or adjustments in the operating activities. And we can also see if there were any type of purchases or any type of transactions that we engaged in where we acquired assets. And then, of course, anything that we're having to finance. Tracy, I'm going to pass this on to you if you have any comments here that you want to highlight.
Sure.
Notice this is also a reflection of the financial position and the what did we just see? The second one, activities, statement of activities, yes.
Yeah. So nothing specifically on this report as it comes out of the audit, but I will say another thing that's been really helpful to our staff and our board is preparing a cash flow statement to share with them quarterly. So again, we're looking at our cash balances in our account. So watching money that's coming in and out from month to month and seeing how much of a runway we have. Is there a point in the year where it's going to be significantly decreased that we need to be aware of, or how might exceeding goals or not meeting them impact that? And so that's kind of just to help monitor it throughout the year by coming up with a cash flow statement. And if you take the tip that I shared earlier by putting it into QuickBooks by month, you could get that report out of there, but you're already doing the work needed to create a statement like that you can share, particularly with your finance committee. I mean, back to the question about giving the board a high-level look. We definitely go through these reports in more detail with our finance committee prior to our board meeting, and then give the board a higher overview of the finances, sharing all the same reports, but maybe not going through them in the same level of detail.
Okay. And then our, I don't know if there's a question there or not, but we'll go on to the functional expense report. So this is a breakdown of what the expenses are. So the statement of position, of financial position, the statement of financial position. And if you would, we'll stop here, Leslie. The statement before it is a comparison between 2018 and 2017. And so this particular auditor's report is for the year ending June 30 of 2018. And this gives you a specific breakdown of those expenses that were kind of grouped by line item. This gives you a breakdown of what those expenses are. And so here it's divided into three categories: program services, general and administrative expenses, and fundraising and development. And so you can see, as it relates to payroll, for example, where the dollars have been spent, or how much has been spent as it relates, because this is an auditor's report, so this is after the fact. So you can see what occurred in that fiscal year. And I mean, you can just run down the list. This is another, now this does kind of put your board members in the weeds a little bit, But I do think the language in this particular report speaks to the everyday kind of person in terms of what you might spend money on. You know, in some of the other three reports, there's some verbiage in there that you might have to get clarification or you might have to ask someone, now, what does that mean? But this particular statement is, we know what printing is. We know what using a telephone means. You know, we understand advertising and paying for that, et cetera. So this in my mind is another one of those reports. You don't want to hang out here a long time in a board meeting, but at least they get to see kind of where the money is going. And funders oftentimes ask the question, what portion of your budget is administration work, or you paying salaries or meet payroll, and what portion of your budget is actually delivering services or providing programs to your constituents? And Tracy, I'm going to stop there and just let you share your perspective.
Sure. Another thing about the functional expenses, a lot of nonprofits and funders really focus on, as Dr. Palmer was saying, the percentage of program versus support services, which would be your general administrative and your fundraising and development. And we get a lot of questions from nonprofits about what should that percentage be? And they're looking for a magic number. And I would just say, there isn't one. It's very unique to each organization, and we would encourage you to do calculate this accurately to what makes the most sense for your organization. In other words, you know, a lot of times for the center, we're pretty consistently in the 70 to 75% probably program services, which means the rest of the percentage falls in those support services. And that just means that of your expenses that are coming in, this percentage of expenses is directly related to providing program services to those that you serve. And there are expenses that can be allocated across programs. So for example, your executive director's salary, somebody like your CFO within your organization, even things like rent, and how you do that is also something that's up to you, but it's something that auditors look at closely just to understand how you're coming up with that rationale. So at the center, we have folks complete a time allocation sheet. They're not monitoring every 15 minutes of their time, but a few times throughout the year, we're asking them to think about how they're spending their time in different programs and admin functions. And we calculate a percentage, and then we can take these expenses like telephone, rent, equipment, and allocate that based on those expenses across programs. So we could spend a whole nother session on functional expense because you can get down in the weeds. But just to point out, you know, the percentage wise, in this case, program services, I think if I did the math right, was about 77% of their total expenses. You know, which oftentimes is something the general public pays close attention to. I would just encourage you to let things fall the way they do, because every nonprofit's going to have administrative and fundraising expenses, and it's perfectly acceptable to have those.
Okay, thank you. So that kind of concludes the financial statement portion of our financial management session. And again, we wanted our audience to understand some of the fundamental documentation that is generated as a result of actually having a formal way of managing your finances. And as I said earlier, some organizations are smaller than others. Not all nonprofits have a full-time CFO. You may be contracting with a bookkeeper, or you may be contracting with a CPA. And again, you have to kind of determine what works best for your organization. When we get to the end of this talk, we're going to talk about GAAP, or general accounting principles. And so that is the go-to kind of guidelines to kind of help you begin to make decisions about how to set up this particular management function in your nonprofit. The next thing that we're going to highlight, and this is the 990. So this is the documentation that we submit to the IRS at the end of your fiscal year. And I do believe that there is a time period from the time your fiscal year ends until you actually submit this documentation. Is it 60 days or 30 days, or I don't know, Tracy, if you know exactly how many days it is, but there is a time period that you have in order for you to submit this. And then Leslie, if you could go ahead and go to the website of the nonprofit that we're using today, and we'll just look at everything from there. But Tracy, go ahead.
I'm sorry, and Dr. Palmer, I'm going to have to ask you to repeat that. I was actually answering a question in the chat, so I missed the first part of your question.
It was related to, I believe, the 990 and the amount of time that you have from the time your fiscal year ends to actually submit it to the IRS. And I will say, you want to make sure that you're doing this on time. I know sometimes some nonprofits, when you're smaller, you may not necessarily get around to it, but you want to make sure that you submit this. There was a time about, I don't know, 5, 6, 7 years ago where the IRS purged all of the 501c3s that had not submitted their 990, say within 3 years, they dropped them. And then you had to reinstate. So you want to make sure you do this, in the time that you're given. Tracy.
Yeah, and based on your size, there's different types of forms that you have to complete. But yes, our fiscal year ends June 30, and so our 990 is due by November 15th. And so that would be July, August, September. That would be the 90 days, I think, if I'm doing that correctly.
Mm-hmm.
You can apply for an extension, and it is automatic in the sense that it will be granted to you, but you still have to submit to apply for that extension. So the way our timing works out with our board is oftentimes we end up filing an extension because our board meeting is a few days after the November 15th deadline. One of the things that we like to do, and one of the questions they ask you on your 990 is, has your board reviewed this prior to you filing? We like to send it to them and give them at least a week to review it and ask any questions. And oftentimes it's completed by the board meeting so they can ask the CPA firm questions as well. But it's important to us to give them that time to review it so that we can check that box knowing that we've given them a chance to look at it, not just saying, yes, we sent it to them in advance of filing. So there's an extension available, but there is a form that you have to complete and send in order to get that.
Okay. So Leslie, if you would go to the top of this website. So this is the case study nonprofit we're using today. And what I like about the way this is showcased on this site is that this particular Big Brothers Big Sisters organization, they put everything out there. You don't have to look for it. It's easy to find on the website. And so you can kind of see they have a section that's titled Financial Accountability. You can go ahead, Leslie, thank you. You can go ahead and scroll down or up. And so there's the annual reports. They have annual reports all the way from 2014 to 18. They have their audited financials, which is what we put in the link for you. That's where we pulled these financial statements from. And then they also have access to their 990. That's also there. So Leslie, if you would just click on the 2018 one. And you can, I'm just gonna have her just kind of scroll slowly through this. For some of you, you may have never seen this before. And so this will give you a chance to see what this looks like. And so your nonprofit fills this out, fills in all of the pertinent information in terms of expenses for that fiscal year and revenue and activities. And also their signatures. You're going to see where signatures have to take place in there as well. You can go ahead, Leslie. I just want everybody to kind of see. And I don't know, Tracy, as we're scrolling through this, I don't know if there are just any general things you want to share or comment about in terms of this.
Sure, I would just say the first couple of pages are summary pages where they pull that information from other schedules that may have been completed as part of your 990. And then you can see there's a section with lots of questions to answer, some of those prompt additional schedules that need to be completed. And we keep our financials on our website as well. We do an audit summary, so not the full audit, but a summary of those key statements that Dr. Palmer just walked through, as well as our most recent 990. And I think there's somewhere on here where you check to say how's it being disclosed to the public. So if somebody were to ask you for a copy, you'd need to give it to them. A lot of orgs put it on their website, I think, just to make it easy for folks to have access to that. Yeah, right there, Section C disclosure, where it asks about making those available for public inspection. They're also available on GuideStar for organizations. And then the other thing we put in our financial section of our website is our annual report for the year. So depending on the makeup of your organization are the schedules that go along with this in terms of what you have to complete. But those first few pages are designed to be a summary of revenue and expense. The 990 is also a really great place to tell your story. So where it talks about program services, Schedule O is a schedule where you can, it's kind of like overflow. So when back in the, Leslie, could you scroll back up to the, closer to the beginning of the document? It might be on the second page, I think. But basically, it gives you a place to talk about your mission. Yeah, right here. And then number 4 there says, describe your organization program service accomplishments for its 3 largest program services. So they give you 3 sections there, but this can continue in a Schedule O. So the center has 5 or 6, and we talk about all of them, and we share what we've done in each of those program areas for the year. How many people we've served, how many educational opportunities we've provided, how many volunteers we've used, whatever it might be. We use this as an opportunity to share some of our successes from the year. And since this is a more public document than maybe your audit, your organization may not even have an audit, it's a great place to be able to do that. A lot of funders ask for this. Like I said, you can find 990s on GuideStar for nonprofits. So use this as a document to tell about your organization and some of your accomplishments, not just report the financial information. It can be a great tool for both.
Okay. Also keep in mind too that there are 2 sections where you have to highlight the governance of your nonprofit and also the management of the nonprofit. That's like page 6, or it's a little further into the document, but that's another piece of information that you're providing. And Leslie, you can go ahead and just go like to maybe page 9-ish, where the statement of revenue is. So this is where you record more specifics that you might actually pull from those financial documents and reporting that you've done all year. And Tracy, I'm going to pass it to you with that. The statement of revenue.
Yeah,
Yep.
again, this just summarizes and breaks it down just a little bit differently from the reports that were pulled out of the audit in terms of the type of revenue that has come in. So, you know, if you go through an audit, this is a pretty fairly straightforward section to complete. And, you know, ours, obviously, we would list things like membership dues. We have unrelated business revenue that comes from advertising. And so you break those out and disclose those on this schedule as well.
And then the last thing I'm going to say about the 990, Leslie, if you go to the very end of the report, the Internal Revenue does ask, how do you report as it relates to your finances? And so there's a section titled Financial Statements and Reporting. Let's see. It's going to be keep going, just go to section, it should be in this section 12, unless it has moved. Okay. Go up one more, go up a little bit. Let's see if it's here. Okay, there is a section titled Financial Statements and Reporting. And again, this is where you indicate what your accounting method is. You know, was your organization or your nonprofit's financial statements compiled by an independent accountant, et cetera, et cetera. My point in bringing that up is that it is important for your nonprofit to adopt a systematic way of, one, managing the finances, tracking, and the like, but also in terms of generating reports and sharing those reports with stakeholders. So that is, I don't know, Tracy, if you have any other things to say about that. Again, you know, with the time that we have, I mean, we could do a whole training on just the 990 by itself. So.
No, thanks, Dr. Palmer. I couldn't quite remember that section off the top of my head either.
Yeah, that's okay. That is okay. So in terms of one of the things that we said earlier, and I think Tracy made this comment also, is that this is all of your documentation is linked together. So the reporting that you're doing every month, right? And the information that you're sharing with your board ties into what is going to be reviewed by an auditor, right? Which is the whole report that we shared with you in this case. And then also the 990 has to be completed. So that's another piece of the puzzle, if you will. And then also an annual report. The North Carolina Secretary of State requires nonprofits to submit an annual report each year. And then also it is just a best practice that your nonprofit is generating a annual report. And Leslie, if you could go back to the website for me, and if we could go to the annual report for 2018 for this organization. And I don't know, Tracy, if you want to make a comment about annual reports in general. All of the financial information is pertinent to generating that section of the annual report. The annual report has lots of information in it, or I should say a variety of information. One piece of information that's in your annual report is a picture of what your finances look like for that year.
Yeah, I think we use our annual report again to just tell our story from the year, and highlight some of our achievements in our program areas. As Dr. Palmer said, we do also provide some financial information in that report. We use it to break down a percentage, where does our revenue and our come from and where does our expense go. So we give those back to the functional expense. We give those percentages of our programs for expenses. And then we also share, that 30% came from foundation contributions, whatever it might be for the year. And so it's a good place to share that information, to tell more of your story, and also to thank your donors and supporters and funders, because we have a page in there as well highlighting that.
And Leslie, if you could come back down and make it just a tad bit bigger where that circle is, where it says FY18 revenue. If you could bring that back in the center of the screen so everyone can see that. So one of the best practices is for our nonprofits to diversify where dollars are coming from. And you can see that here in this picture. You can see where the dollars, what the breakdown is, if you will. So you can see net revenue. Again, this is revenue. Net revenue in terms of special events, where those dollars came from, corporations, foundations, government. The looks like Big Brothers Big Sisters has a foundation, and there's some money that came in from that. Individual contributions, you can see where those dollars, what that amount was, and then endowment. Now, one of the rules, if you will, if I could call it a rule, or best practice, is to not have more than 1/3 of your budget coming from one place. So that means we need at least 3 to 4 to 5 different revenue streams, or 3 to 4 or 5 different ways in which dollars are coming in. And so here you can see the breakdown. Now they do have corporations, foundations, and government together. That looks like it's probably a grant category, and they've put all the grants, together, which I like the fact that they did that as opposed to breaking those three out, so that we can really see what percentage, the actual percentage of this $7.3 million revenue generated. We can see exactly what came in from those grants. One of the things, we're going to be moving into fundraising after our break, but in terms of fundraising, the focus is to have a significant amount of your dollars coming in from individual donations. And notice in this example, 40% of the revenue that they received came from individual contributions, which means that more than likely, those contributions are not restricted. And so therefore the nonprofit can spend those dollars, and unless designated by the donor, as you know, they can spend those dollars as needed. And Tracy, I'm just going to stop there, and I don't know if you have any comments about that.
No, I don't think so. I mean, that's the same thing that the center does on its annual report.
Okay, all right, thank you. And then Leslie, the last thing is for us to talk about, you all have a sample of an auditor's report. That's the document we've been using today. The generally accepted accounting principles, if you could just take us to that website in terms of the go-to entity, and there is a web page on their site specifically for nonprofits, and I think we gave the link that takes you directly to that. I don't know, Tracy, if you want to make a comment about GAAP. I was just giving a general overview of that, and that is a go-to place.
Yeah, I think that's appropriate for what we're trying to accomplish here today. So she's got the link for you guys to look over. Again, if you have an auditor and someone you work with closely, they should be helping you stay on top of any accounting standard changes and incorporating those into any reporting or the way that you're accounting for revenue and expense. So I just would encourage you to look over this website.
Thank you. And then Leslie, I believe we have a link to a handout. What is GAP? I think. So you all should, I don't know, Leslie, you'll have to remind me. Did we put that in handouts, or is that a link that'll be in the chat today?
Not sure, but I can check really quick.
Okay, thank you. So as she is pointing us in the direction of that particular piece of information, we have the website at the top. When you get that, it'll either be in the chat or I do believe we're putting it in the chat today. That's the document, and so it just gives you a highlight. This is what GAP is, and these are the basic tenets of GAP. But again, your professional accounting services should be utilizing this particular entity and this resource as to the formalities around how your finances or accounting practices should be managed. Okay, so I think Leslie is going to make sure that you all get this. And then Leslie, once you do that for us, thank you so much. If we could go back to the PowerPoint, and then we're going to take a break once I do that. So go to the next. So that's all about financial transactions. And the last thing next to the last thing I want to say here is that our nonprofits should have internal controls, and there should be some level of a financial review every year. Now, audits are not cheap. They do cost money. And so, you have to really, your board or your nonprofit, your board, your finance committee, you have to make some decisions about how you want to manage this aspect of your nonprofit, but there should be some formality around that. And then, of course, we've talked about the audit, which is what you have the auditor's report. That's what we were using to review the statements. The next thing we have is, the next slide is what we've been talking about when we saw the part in the annual report for the Big Brothers Big Sisters nonprofit. They had $7.3 million in revenue coming in. The concept is to diversify where your dollars are coming from. And that varies from nonprofit to nonprofit. Some of your nonprofits can charge nominal fees for services. Some of your nonprofits are able to access grants both locally, statewide, and national or federal. Some of your nonprofits may have membership dues. That's a revenue generator. Some of your nonprofits may sell products or sell services. Some of us enjoy Girl Scout cookies, right? Girl Scout sells cookies. So these are different ways for you to explore in terms of how you might diversify your revenue. Tracy, I'm gonna let you have the last word on this. This concludes our financial management part of our training today. And then we'll take a break, and then we will do fundraising. But Tracy, I'm gonna let you have the last word here.
Yeah, I mean, I think you covered that well. I would just say, if you can diversify your revenue, then it helps you, I think, strive towards the goal of being a more sustainable nonprofit organization, because you're not relying on one key grant or key service. So where you can revisit those throughout the year, I think can be really beneficial to your organization.
Thank you. And so I think the next slide for us is the title of fundraising. But before, if we could go back to the gallery view, before we take a break, I'd like to kind of hear your thoughts. Now, the first part of our training today was kind of information out, right? With some questions and all kind of peppered in. The second half, we're going to be in breakout sessions. You're going to be doing some applied learning. You're going to be hands-on. So it won't be just kind of this one way. We're looking at financial documents, but that's kind of the only way really to do that, so to speak. But when we get back, the very first thing you're going to do is go into breakouts. So, but I'd like to kind of for you to just kind of give us a sense, Tracy and I, a sense of kind of where you are. This was a fundamental kind of way that we wanted to train today. And so give us a sense of where you are with this topic before we go on to the next. I see there are a couple of comments in the chat. Let's see. Is
Lisa.
GAP similar for the corporate world? I think that's the first question, I think. If I missed someone, I'm sorry. Yes, I mean, GAP is, it is for both business and nonprofits. And as we showed on the website, there's a specific space, if you will, specifically designated for nonprofit organizations. And then I think, let's see, we're a small organization and most of our treasures in the past have not come from the nonprofit world. Okay, any major resources we should be pointing them towards? I would need to hear a little bit more about what your nonprofit is and what it does in terms of, maybe directing you into, if I'm understanding the question correctly, in terms of directing you to other resources, Rose. I'm thinking that's what you mean, but I don't, unless I know a little bit more about your organization, I don't have a general just kind of space for that. And Rebecca, I'm going to let you take over for the.
Going to add one quick thing before you jump in, Rebecca, if you don't mind. So just as a recap, Dr. Palmer, a few others have said it was a good recap, always good to review the fundamentals. I want to encourage you, we do have our Center Connect community that is designed specifically for this group of participants of the Institute. Please feel free to populate resources that your organization uses, to ask questions that we at the center might be able to respond and give you some templates or samples and guides and best practices for any of the questions that you might have or think about after a session. And again, to Dr. Palmer's point, there are some that are organization specific. So without getting a little bit more background information, we might need to, have further conversations offline, but we're happy to have those conversations. So a few things, if you are a member, we can make sure we connect you with some pro bono services with CPAs and accountants from all across the state that can give a more in-depth dive to some of the inquiries that you have. But you can certainly reach out to any of us. We're happy to help to follow up on all the things that we may not be able to get to during today's session. So I just wanted to reiterate that. So Rebecca, feel free to take over from here.
Sure, yeah. So there was a question for you, Tracy, from Katina. Have we addressed that one yet? Our monthly finance meetings, we also look at cash projection worksheet that I work with together with our business manager. And it combines the budget and actuals because cash is always key. Can you talk about that as well?
Yeah, so without seeing your document, it's probably similar to the cash flow schedule that I was talking about earlier, because cash is key. And I'm glad you raised that, because another thing that I think is really important when it comes to budgeting and monitoring financials is it shouldn't just be the responsibility of the CFO or the finance person, business manager, whatever, whoever it is in your organization. I work very, very closely with our chief sustainability officer because he is the one that knows best about the contributed revenue. In fact, we work very closely with all of our leadership team and staff to both develop our budget and monitor it, because within programs, again, they're the ones that know best about what they'd like to do for the year, what they're going to need in terms of expenses. So when you're going through that process, please, I encourage you to involve everyone in the organization at some level in that process, because you're going to need that insight into creating a realistic and effective budget for the organization.
Yep. Thank you, Tracy. And then a question from Catherine, official definitions for restricted versus unrestricted. Is that something we could pull and share in the chat?
Yeah, I think so.
Thank you.
Let me look around and see if I can find that. If not, I did ask Salima if we would have access to the chat afterwards. So if there's some questions in there that I've noted for follow-up or that we don't get to, we'll certainly circle back with you all.
Yep, we'll save that and be sure to make sure you have access to that as well, Tracy. And then we want to also mention, are there any specific reports that you would say resonate most with the board? Like if you were, to crystallize it into ones, either one of you.
Well, I mentioned earlier the functional expenses, I think, is one, and definitely the statement of activities. I mean, that's kind of you know, one that kind of breaks down and it focuses on more around stewardship. I mean, again, as I mentioned before, it's really what is it that your board wants to know? And then based on what they want to be informed about, that's the kind of reporting. And if you're choosing between the ones that we shared today, which are common, then it really depends on what your board wants to see. And if you have a finance committee, they could help you kind of tease that out to identify, well, what information do you want to know about? Because you can't share everything that happens on the financial side of the organization. Tracy, I'll let you comment about that. But those were the two out of the 4 today. Though, and the 990 they have to see because they're supposed to review it. So.
Right.
Yeah, I would agree with that and just add that if you're reporting to them throughout the year, which you should be for transparency, our board, I think, also really likes previous year comparisons, just so that they can see how we're doing this year compared to the same time period. And if there's any big variances, I try to make notes to help them understand. Well, our registration fees are down this year because registration opened later this year than it did in previous years. Any kind of notes that you can provide to them that help them understand. And we're constantly changing. I mean, you know, obviously the finance committee doesn't want to ask for things that are burdensome for me to do, but if there's something that they like to see, we try to incorporate that for the next meeting. So flexibility, I think, is key as well.
That's great. Thank you, Tracy. The only other comments have been around TechSoup and what a great resource it is. So if you haven't checked out TechSoup, it's a great place to get some valuable information and resources. Thank you.
The only other thing I would say as we transition now and take a break is we're going to move into talking about fundraising. And we strategically trained on financial management first before we trained on fundraising, because it's very important to understand the scope of how the finances are managed and what the organization looks like, if you will, as it relates to revenues, expenses, et cetera. Because the fundraising program or the fundraising plan for your nonprofit should align with, and Tracy said it a second ago, you should be interfacing. You should be those two functions should be in sync. They should be talking. They should be working together so that there's an understanding of what's feasible on the fundraising side to make sure that it matches the need, the financial need on the financial side of the organization. So, so when we get back from our break, we will begin our topic on fundraising. Tracy, thank you so much for joining us today. Thank you for your expertise and your insight and guidance on all of those points that were raised and the ones that you made. So thank you so much. We are going to go into break. It is 11:21. We're going to come back at 11:30. Thank you.
Thanks, everyone. We'll see you at 11:30.
And we thank you all for starting to trickle back into our second half of the session. Again, want to thank Tracy on our team for providing insights regarding our financial management part of the curriculum. Now we're going to jump into fundraising. And so, with that, I'll turn it over to Dr. Palmer to lead us into the second half. Thank you once again for joining us.
Thank you, Salima, and welcome back, everyone, from your break. Hopefully that was enough time. We kind of plowed right through all of that financial management information, and just to kind of keep in mind, this is a management institute. We're focusing on management more so than we are, say, leadership per se. We're focusing on, these kind of 6 areas of 12 principles that the North Carolina Center for Nonprofits has framed its capacity building work around. And so we're moving into fundraising. And as I mentioned before the break, we strategically put financial management prior to fundraising. Oftentimes when I'm interacting with nonprofits and I pose the question, what is your biggest challenge? A lot of times the comment is fundraising. And I oftentimes highly suggest to back up to the financial management and then begin looking at the fundraising, so that the fundraising is informed by what is highlighted in terms of what your organization does, what its mission and what its vision is. So as we move into this conversation training around fundraising, it should be diversified. So we should try to have a diversified platform, if you will, where we're seeing dollars coming in, just like in our case with the Big Brothers Big Sisters example, where we see that there is a significant amount of dollars coming in through individual donations. Now, some of you will say, well, how did I get individual donations? Who do I ask and how do I do all of that? Well, we're going to touch on some of that as we move forward in this topic. But we should be thinking about that particular way of approaching fundraising. Fundraising is daily. It's daily. Some of you know it's hourly, right? Every hour you're working on something related to fundraising. So the very first thing we're going to focus on is kind of what fundraising is, and I want you to have some discussion around that in a breakout. The next thing after that we're going to focus on is the stages of fundraising. And then we're going to break each of those stages down into 4 different parts that we're going to talk about. And then we're going to talk about communicating with the donor, and then specific fundraising programs or giving programs and what we should think about in that regard. So I've got to work us through this hour to get through all of that and to cover all of that information. So in your packet, in your handouts, you have a handout titled, What is Fundraising? You have a handout titled, Fundraising Pitfalls. So when you go in your breakout, I want you to refer to these 2 handouts, and I want you to have a conversation around, what does fundraising mean to your nonprofit? What does it look like? And then also, what does it mean to you as it relates to your role in fundraising based on the role that you have? Tracy said something that really stuck with me and resonated with me, and that is financial management and paying attention to the finances is not just the person who has the title as CFO. That is everyone's partially responsibility. The same holds true for fundraising. It is not just one person's role or responsibility. It's all of our roles and responsibilities to work to make sure we have diversified revenue coming into our nonprofit organization. So again, in your breakouts, I want you to talk about, what does fundraising look like at your nonprofit? What role do you play in fundraising? And then I want you to use those 2 handouts to kind of have some discussion or reference those as you're having your discussion. Rebecca is going to take you into a breakout.
I'm going to open up all the rooms here. And how many minutes would you say, Dr. Palmer?
Let's do about 3 minutes. It's going to be pretty quick because we do have quite a bit to get through. And if you could come back with one word that sums up what your group had to say. Thank you.
All right.
I think I said 3 minutes. I hope that's enough time. I hope that's enough time for everybody to do that.
Oh, good. All right, welcome back, everyone. We had hope you all had a good conversation, and what came out of that, we're hoping that you can put forth in a word cloud that we put together. I'll share a link in the chat here, and you can go ahead and click on this link. And the question it asks is what words come to mind when you hear fundraising? So if you click on that link, give me a thumbs up if that's working for you, if you're able to add your word or words in there, and we'll start to generate a word cloud from those that I can share.
It's not allowing me to click on the link.
The link isn't active. Okay, let me check on something real quick.
I just copied and pasted it into the browser and it worked.
Oh, okay. Yep, so copy and paste that link into the browser. And we'll start to, I see some responses coming in, so that's good. Thank you, Matt. Appreciate your help there. That's good. So Dr. Palmer, did you want to continue on and we'll come back to this, or did you want to share now? We'll get her back here in a second. Okay, give about 30 more seconds for folks to add some word associations with the word fundraising. Oh, this is great. Okay, I'm going to go ahead and share what we've developed here. So lock in your final responses. All right, I'm going to go ahead and share my screen so you all can see what we've gathered. All right, we'll do full screen. Can everyone see that? So we have quite a few. The biggest ones that come up here are relationships, diversify, sustainability, again, diversification, another form of that word. Relationship, I love that one. Valuable, we've got story. There's another big one that comes up. Important. That was great. Thank you all so much for submitting those. We'll go ahead and save this and share it as part of the wraparound with each of you. And let's see if Dr. Palmer has been able to join us back here. Oops.
Just one moment. Dr. Palmer is having some technical difficulty. So if you just give me just a moment, I'll make sure she's taken care of and we'll get started in just a bit.
Was everyone able to see that word cloud? Give me a thumbs up or a nod. Yep. Okay, good. Good. Any surprising terms that you saw or anything that you really resonated with that you thought, oh, I wish I'd thought of that one. That's a good one. Feel free to either unmute or raise your hand or pop it in the chat while we wait for Dr. Palmer to get back with us.
I seen the word overtime and I'm like, yeah, it's a lot of overtime.
That's right. Yeah. The work is never done, right? Yeah. Yeah. Relationships and diversity. Excellent. Corey mentioned, noticed a lot of stress and frustration too. Yeah. It can be very frustrating. From Mary, all hands on deck was one of my submissions. Everyone on the team has a role. Yeah, it's something we talk about a lot at the center too. From Maria, someone put hot potato and that is very relatable. Pass it off quick. Oh, that was Sharon. Sharon's taking responsibility for that one. Nice job. Yeah, go ahead and give a thumbs up if you can relate to that hot potato aspect of fundraising at some points. Yeah, we got some thumbs up going in. There we go. Oh, Adriana mentioned, I didn't see board of directors. Was it there? Let me go back and check. Let's see. Did I see board of directors? I'm so glad you pointed out that hot potato because I had not seen that before. That's really interesting. I don't think I see board of directors on here. Huh. Good one to add for sure. Yeah. From Catherine, Kathy in our group brought up how important it is to be detail-oriented with donor events. It takes so much work with most people, that most people realize to do this work well, and that is so true. I feel like these days, especially these days, you have to have a plan B, a plan C, a plan D, and so on and so forth when it comes to donor events for sure. Thanks for hanging in there with us while we wait for, oh, here we go. I'm gonna go ahead and admit, I'm hoping this is Dr. Palmer. I think it is. Let's see if we get her here.
Hello, I'm back.
We can hear you. Sorry about
okay,
that.
Perfect. No, that's okay. I am good. I think it's the server here. Everything is like I'm synced to the internet and everything. I'm connected from my laptop, so it may just be a university thing because I'm all hooked up otherwise. So anyway, but moving right along, did you get through the word mapping? Did you do that in terms of what words came up?
We did, and we shared some reactions to those that people put in the chat and talked about a little bit. So I mentioned that I'll go ahead and download that and share it in the wraparound. But we had some good ideas and good words that came through. associations.
All right.
Mhm.
Excellent. And can we go to the fundraising quotes? Leslie, and you all have to let me know when it's showing because I
It's
can't.
up there. Yep,
can't.
Leslie's got it ready.
Okay. Okay, so Rebecca, you'll just have to tell me once I ask for something on the screen, you'll just have to say, yep, it's there, or
Okay.
no, it's not. And
Okay.
I've got everything I need right here. Yep.
Okay.
Uh-huh.
All right, it's up there.
All right, awesome. So here are some quotes from different individuals. You did the word mapping and shared with us the words that kind of came to mind for you. Maybe you see some of that phrasing in the fundraising quotes that we have listed. Fundraising is the gentle art of teaching the joy of giving. That's one that I kind of like. And then at the bottom, wherever there's a human being, there's an opportunity for kindness. And so these are some individuals who have just kind of framed the way they think about fundraising. And we just wanted to share those with you. The next thing that we're going to focus on is in your handouts. It's titled Donor Base. We're going to focus on the first stage of fundraising, which is identification. And then we're going to work through cultivation, solicitation, and stewardship. And so you have a handout there that just highlights the significance of having a donor base and building a donor base. And so this is one of the important elements of building out what your fundraising program is going to include. As we saw in the visual with Big Brothers Big Sisters, 40% of the revenue for that nonprofit came in that year from individual contributions. And that's what you want to work towards. You may not be there today, but you definitely want to work towards that. And so what we've shared here is a way for you to begin to build your donor base. You might consult with your board members about individuals who might be interested in giving. You might consult with some of your friends, family. You might consult with some of your current donors who might give you leads as to who might be willing to give. And so in this stage of identification, the focus is on donor prospects, So it may be that you are trying to maintain your existing donors, but you're also trying to build maybe for the first time a donor base. And maybe you're also, wanting to expand your existing donor base. So in your handouts, you have a handout titled Prospect Identification List. And so we're going to work through an activity here. And I want you to, in the first column, I want you to identify 15 people that you know. 15 people that you know. And or you can take out a piece of paper and you can recreate this if you don't want to write on your handout, or if you're just looking at it on the screen, you can just take out a piece of paper and real quickly create these 4 columns and rows. Is everybody kind of there? Rebecca, you'll have to help me to kind of know if it looks like everybody is kind of ready to go with this.
Okay. Leslie has pulled up this planning sheet, so everyone should be able to either bring it up on their handouts or have something to refer to on their screen here.
Perfect. So what we would like for you to do here is we would like for you to write 15 people that you know. So just real quickly, I'm going to walk us through this fairly swiftly, but I just want you to kind of get the gist of this notion of prospecting. And for those of you who may have already used this practice, then maybe there's something that we can share with you that might be a little bit different than what you've done in the past. So again, 4 stages of fundraising: identification, cultivation, solicitation, and stewardship. 15 people that you know. And then next to that, you want to put a check mark if that individual believes in the mission of your nonprofit. Do they believe in the cause and the mission of your nonprofit? Do they believe in the cause and the mission of your nonprofit? You're just going to go down and put a quick check. I'll give you a couple seconds to do that. And then of those individuals who believe in your cause, how many of those individuals give away money? How many of those individuals give away money that believe in your cause? If you would just put a quick check. And when you put that check mark of those who believe in your cause and give away money, I want you to circle that check mark. So in other words, you might have 10 of the 15 that believe in your cause. How many of those actually give money away? Not necessarily to your cause, but they give money in general. They just believe in giving. I want you to circle those check marks. And then of the ones left, I want you to put a check if they give away money, but they may not believe in your cause. So they give away money, but they may not believe in your cause. I think you probably kind of see where we're going with this. Okay. And then of those individuals that believe in your cause and give away money, think of a dollar amount that you think they would be receptive to giving if you ask. You know, so if it's your grandmother and her name is Sally, and she believes in your cause and she gives away money, if you were to ask her to give to your nonprofit, what would be that dollar amount? What would be that dollar amount? What would be that dollar amount?
And just some clarification questions, Dr. Palmer.
Sure.
And I think you may have answered this in your example given there, but personal or professional contacts for this list?
All of the above.
Or, yeah.
All of the above. So these are any people that you know.
Perfect. And then for the circle, Wendy asked, what did the circle indicate?
A circle indicates if they believe in your cause. So you have two categories of people in the giveaway money column. One category is they believe in your cause and they give away money. The other is, and that's a circle around the check. The other is just a check in the fact that they don't believe in your cause, but they give away money. Does that help?
Great, thank you.
We should be putting dollar amounts. We should be putting dollar amounts in that ask column. So now we've created what we call a prospect list. That's basically what I'm demonstrating. It is that as practical as what we just noted. So the idea is to create a list of everybody that you know, that you can think of, you know, that would support you, let's just say. And fundraisers will tell you, it's not just those, you don't just ask the folks that you're comfortable asking that you think would give, but you might be affiliated with someone who you could ask as well, and you may not even know them as well, and they may give too. So the theory is, or the concept is, no one is really off limits. You just have to figure out why you're asking them and then how much you're asking them to give. If we could go to the next worksheet. So if you can envision this, there are 50 of us on this call. We all just generated a list of 15 people, and then we began to analyze that list to determine who would give to our cause. This next worksheet would be where you would compile all of the individuals collectively across all 50 of us. We would generate our master identification and prospect list, we list all of those people that would give to our cause, and we would include the amount of money. So this page could be 20 pages, 30 pages, 40 pages. 15 times 50 is how much? You'll have to help me with that, Rebecca. 15 times 50 is what?
I'm horrible at math in my head.
750, I think. So if all of us have
Yes.
15, yeah, so that's a total of 750. Well, let's just say out of the 750, only 300 were noted as would give to our cause. Then we would proceed with this particular worksheet to figure out who are we going to contact as it relates to this prospect to do the ask. Who's actually going to ask? Is it going to be a board member? Is it going to be you? Is it going to be one of the program staff? Is it going to be a participant in some of the programs? So who is actually going to ask? How much are they going to ask for? And is there any additional information we need to know about this prospect? Everybody with me? Can you show Rebecca a thumbs up or just kind of give an idea? Are there any comments in the chat? Any questions? Identification is about prospecting. So we're identifying the donor for the first time. We're trying to get ourselves geared up to make the ask.
Yep, I see thumbs up and heads nodding. I don't see any questions in the chat, so.
Awesome.
Yep.
Great, great, great. Perfect. Okay, so that's identification. Cultivation is the next thing that we're going to focus on. So we're going to take this prospect list. We're going to look at our existing donors, so existing donors that we have already in our donor base. We're going to analyze their giving so that we know how to approach them in terms of asking them for a gift. Now, in terms of cultivating, something you want to make a note of. Cultivation may be that we're cultivating a donor, meaning we're doing our research, we're learning more about them, we're determining what would be an appropriate ask and who's going to ask. And they may be an existing donor and we want to upgrade them. So like I say upgrade, but we want to ask them for, say, an additional gift. Maybe it's your annual campaign. They've been giving regularly for 5 years. And now you're going to have a capital campaign. And so you would analyze kind of their giving to see what would be appropriate. If you're fortunate enough to have fundraising staff or someone whose job it is to raise money, then awesome. But it may be a smaller nonprofit where you're the executive director, maybe you have one other staff or just yourself. And so you have to kind of figure out who you're going to ask and if maybe you can get your board to help you in terms of the asking. So we identify prospects in the cultivation, then we're going to do our research and do our homework and determine what the ask is going to be and who's going to ask. If it's an existing donor, we're going to analyze their existing giving, and then we're going to determine how we're going to make the ask for them in terms of what it is that we are focused on, be it capital campaign or annual giving, etc. You've got 2 handouts in your packet, People, Rules of Fundraising, and Donor Bill of Rights. People, Rules of Fundraising, and Donor Bill of Rights. And what we want you to do here is just make a note that you have this resource that when you begin asking for a gift in the context of fundraising, these are some of the things you want to think about. People give to people. Some people want recognition, some people don't. That's a rule. Sometimes the people mean more money and more fun, So some of the people sometimes that we're a little reserved in asking for a donation, sometimes can bring additional donations. So we want to kind of keep some of these rules in mind. And then there's the Donor Bill of Rights in terms of the rights of the donor. Once they become a donor, there are some things that you might, some inquiries they may make of you. They may want to have access to your organization's most recent financial statements. And we just talked about financial statements. They may want to have the opportunity for their name to be dropped from your mailing list if they are already given. They don't want you to keep, kind of inquiring with them. They may want to receive acknowledgement, or maybe they don't. So there are some expectations that we should take into consideration for donors. Solicitation. Let's go to that. And then after solicitation, we are in stewardship. We're going to go into another breakout. So I want to get to that. In terms of solicitation, you've got a handout in your packet titled Ask for It. You only get money if you ask for it. I think early on in the chat, there were some folks who said that was one of their fears. One of their fears is asking for a donation. Then maybe there's someone else connected to your organization that should do the asking. Sometimes board members will do this for us, and oftentimes they are perfect for asking for a donation. So it may not necessarily be you all the time, although donors do want to see the people behind their gifts. So if they're giving money to your nonprofit, they do like to, in some cases, some don't, but there are some who they want to interact with you as the executive director, or they want to really connect in a way that's more tangible than just the gift. So that is making the ask under solicitation. It's figuring out, how am I going to solicit for this $100 gift that I want from Dr. Palmer? How am I going to do that? What is it that I can do, that I can engage with her, that might intrigue her or might move her to give $100 to our cause? So that's the solicitation element of what it is that we're talking about today. And then there is stewardship. There is stewardship in terms of thinking about giving in terms of, so we did identification, cultivation, solicitation, stewardship. So donor recognition. Some donors want to be acknowledged, some don't. And so we just have to be mindful of that. So we put in your packet a handout titled, it's one of our programs at the Guilford County Resource and Referral Youth Network. And this is a youth network fundraising plan that we used for one of our fundraisers. And this is our strategy in action. And actually, we had one of the classes at High Point University to help us with this. And so I just share with you what they actually used. And so they identified the donors, and then they identified what strategy they were going to use to thank them. And then they also included the amount of money that they were going to spend on that thank you, if anything at all. Sometimes thank yous don't cost anything, sometimes they do. So you want to factor that in. So in terms of stewardship, yes, it's a matter of managing those dollars that come in appropriately and using those dollars as designated, but it's also thanking and showing appreciation for those individuals that have given. And then the last handout that we have is in this particular section is a stages of fundraising worksheet, and it has all 4 stages there. And it just gives you a template of how you could engage in these different stages. So again, identification, cultivation, solicitation, and stewardship. And you can we put some types of fundraising options or methods over to the left, and then you can fill in how you might approach each of these stages. And Rebecca, I'm going to stop there to see if anyone has questions before we go into our breakout for our next part of our training.
Yep, sure thing. We did have A question from Sarah that I actually think could be a great one to move to the cohort on Center Connect is
Okay.
how we can cultivate new donors in the COVID era. So what I will do and take responsibility for is going ahead and taking that question and popping it as a discussion post on that cohort for Center Connect that you all can respond to with your ideas. I think we could get some really great resources and ideas that way.
Okay.
And then there was a question from Corey about who drives the fundraising efforts, board or staff. And Sarah had chimed in that they asked their board to identify and cultivate and solicit donors, and then staff then helps with the stewardship process. And then staff are responsible for special events and fundraising events.
Okay.
For them. So there was some nice participant support there for one another in thinking through solutions. The other thing that I'll mention is we do have if you're looking for some additional support around this whole, fundraising in a COVID-19 world, we do have an upcoming webinar that's coming up on October 15th. I'll pop the link for that in the chat here so you all can investigate that a little more. It may give you some more guidance. Look at the objectives for it, but it may give you more guidance around how we can continue to recognize, to cultivate new donors, and also really share the impact that we're having despite COVID or in light of COVID. So I'll go ahead and share that real quick in the chat so you all can learn more about that if you're interested in getting a deeper dive into that. Okay.
And Leslie, if you could go ahead and put in the chat let's see, the scavenger hunt activity. And Rebecca, when she puts that in the chat, if you could just read that off. I'm sorry, Leslie, if you would pull it up on the screen and also make it accessible in the chat. And then Rebecca, if you would just read that off for us.
Sure thing.
Yep.
All right. I'm going to download this, pop it open. All right, so this is our scavenger hunt activity. You want me to read these off, Dr. Palmer?
Yes, and so we're going to go into breakout rooms.
Okay.
And these are going to be our instructions. They have there's 3 documents in the, Leslie, remind me, are those in the handout or are those in the, are those going to be in the chat? The pyramid of giving types of handouts. Okay, perfect. So if you could, if everybody could just kind of let Rebecca know that you have those, the pyramid of giving, the types of fundraising, and the types of giving programs.
I'm seeing a couple thumbs raised.
As long as they have it, then you can go ahead, Rebecca, with what the instructions are.
Okay. So before we break out into the breakout rooms, it looks like the scavenger hunt activity, we'll identify the number of giving programs, we'll list the giving programs, and we'll match the 3 donor types with each giving program: habitual, impulse, and thoughtful. And then we'll answer or talk about what the pyramid symbolizes.
Correct.
Correct?
Okay, is that my 3 questions?
I think so, unless there's another one below that I can't see. I think that's it. Is that correct?
Okay, perfect. Okay, perfect. So you'll go into your breakout room and you will use the handouts that we provided. We want you to become more, we want you to actually use those handouts. So in the breakouts, you are going to share with each other your response to those questions. So you're actually looking for the answer. You're looking for the answer using those handouts. Everybody ready?
All right, Let's roll.
Okay, 5 minutes.
5
and
minutes.
We'll be back.
Okay, here we go. All right, welcome back everyone. As you're joining the main group, let Dr. Palmer pick back up where we left off.
Okay, all right. Is that my cue?
Yep.
All righty. Okay, so what we wanted you to do in the breakouts is we wanted you to become more either familiar or knowledgeable about the pyramid of giving and the different types of giving programs and the types of fundraising. And so if you notice in your handouts, there is kind of a connector to these handouts. You got the pyramid with a state, major, and annual giving. And then you have a description of each one. And then you have specific types of fundraising that align with each of the different types of giving. And so what we wanted you to do is we wanted you to just kind of have some discussion and work with this idea of what would be more appropriate for an impulse donor versus a habitual donor, meaning someone who has been giving for a while, versus a thoughtful donor who has been giving to a nonprofit over a period of time, and they've also decided that they're going to leave maybe in their will, or they have a special gift that they want to give to a particular nonprofit organization. So we wanted you to match those so that you could become more familiar. So hopefully you were able to become more familiar with the impulse, habitual, and thoughtful donor. Can Rebecca see like a thumbs up or a not so much? Or that was really kind of the focus of going into the breakout, for us to begin to think about donors in terms of impulse giving for the first time, habitual meaning they've given routinely, like say for several years or a few years, and then thoughtful meaning that they're giving above and beyond, let's just say a regular or annual gift. So Rebecca, you'll have to let me know if we accomplish that in the breakout by their reaction.
Yeah, I saw several nodding and thumbs up reactions. So I think they got what they needed to out of that, hopefully.
Great. What I would like to table for us next week when we come back in our reflection is I'd like for us to come back to the question about what is the relevance of the pyramid? Why is the pyramid, why do you think that it is called the pyramid of giving? This is in most fundraising training experiences, typically this is going to come up, this concept or this conceptual framework for thinking about doing fundraising. So we'll table that for the reflection, and we'll come back to that next week. The next thing that we have in our information, if we could go to the PowerPoint, please, and if we could go to the donor communication slide.
All right, looks like we pulled that up.
Perfect. And so for donor communication, practically we're talking about advertising and marketing to our donors. And some of our donors or our stakeholders are individual, grantors, volunteers, board members, staff, community at large. And so there is quite a bit of activity using social media now to fundraise. And so we're seeing Facebook. Facebook actually has a donate button now. We are seeing people link and harmonize the platforms so that it's giving out messaging related to giving to nonprofits. And so this idea of communicating with your donors is important. The one thing you want to make a note of, though, is that you want to make sure you're using a communication medium or tool that aligns with what your donor prefers. You know, so we wouldn't necessarily communicate through texting or Instagram or suggest it if our donor doesn't use that particular apparatus to communicate. So that's something for us to think about. Then the next slide is fund development strategies. We talked about this in financial management. but I wanted to just kind of revisit this a little bit. We should be diversifying where our dollars are coming from. And so grant writing is a way to bring in dollars. Some would argue that grant writing is not fundraising, that it is a unique mechanism for bringing dollars into a nonprofit, but it is one in the mix, but not necessarily fundraising outright. And then there's earned revenue. That's another outside of fundraising. It may be that your nonprofit has something to sell, like a product or a service, or maybe membership. And then this idea of social entrepreneurship, where nonprofits are engaging and generating revenue to further raise the awareness about a cause. And so there may be something that you can offer up for exchange, like a good, that really helps to helps us to support a cause. Also, Rebecca, if we could table that too. So it's social entrepreneurship and the other item that I noted that I wanted to hold, the pyramid that I want to hold until next time. And then the very last thing are there any questions?
I'm not seeing any questions, but feel free to add any if you have any in the chat.
Perfect.
Yep.
And then the very last topic for us is the fund development human resources. Real straightforward here. There is a handout in your packet titled The Effective Fundraiser. And so here what we're basically saying is that in order for us to do fund development, that we need paid staff, we need volunteers, we need the board, and sometimes we might even need a consultant to help us do fundraising. And so you want to make sure you have the people capacity to do fundraising and to be able to bring in those dollars for your nonprofit. So that concludes my topical information for today. Financial management and fundraising. Financial management and fundraising. And next week, it'll be human resources and graduation. So I know I wasn't able to see everybody this last, 20, 25 minutes, but I am so glad that we were able to share today. We've got, like I said, one more session to go. And I'm going to turn it over to either Rebecca or Salima to officially close us out.
Sure. I just wanted to give a couple of closing remarks. As a reminder, to Dr. Palmer's point, we do have our human resources and human resources and graduation for our next week's session. Please be on the lookout for the follow-up email that will be sent from Rebecca. We want to send out some information that we'd like to collect from you all to prepare for our graduation ceremony. So we'd like to get your feedback, your insights and thoughts. And so again, be in tune to that. In addition, if you have further questions or discussions, I want to encourage you to connect to our Center Connect community that is designed specifically for this group. And then lastly, Rebecca has put the Survey Monkey link for our evaluation in the chat. We encourage you all to please provide your feedback and insights. The more that you're able to give us your thoughts, your insights, the better informed we can be to respond to your needs and your questions. So again, we appreciate you all for your time and investment today. If there's anything else that you need that we did not cover, please do not hesitate to reach out to us. And again, have a great day. See you next Tuesday. Take care. Jean, did you want to add a few closing things before we go? You're muted.
Well, she's coming on. While she's coming on, I'll mention that we will be, some of these follow-up questions that are coming through, we'll touch on those at the beginning of the next session, just so you're aware. We do see your questions there, and we'll continue there. So take it away, Jean, and close us out. Oops, you're muted, Jean.
Looks like Jean is having some trouble with her mic there. We will pick
We're
up
off.
with Jean. Oh, are you okay,
Yeah.
Jean? You're free
I
now?
am good. Yes, thank you. I just
Awesome.
wanted I just wanted to be able to say, sorry about my technology. It always shows up when I least need it to give me a problem. So first of all, I just want to say thank you again to Dr. Palmer for another excellent learning experience. Thank you again to our sponsors and partners, High Point University, Triangle Funders Collaborative, Dr. David Bergen, and of course, a big shout out to our North Carolina Center home team, Salima Thomas, your leadership on this program, Rebecca Beck, and our intern, Leslie Morales, and Tracy Cariette, our Chief Finance Officer, for her contributions today. A couple of my takeaways. Fundraising and financial management are the two sides of every coin. Both are important. Financial management and fundraising is a team sport. Everyone has a role to play, whether it's a lead or support to the main players. Also, informing the board and providing good information is the responsibility of the executive team. And engaging the board in fundraising is an important and critical aspect of building resiliency in your organization. As Dr. Palmer lifted up, people give to people, and showing appreciation to donors in the ways they want to be recognized is important. My head is again spinning with all the information that's been shared here today. We appreciate all of you and your commitment to learning and maintaining standards of excellence in your organization. I look forward to our graduation ceremony. Thank you, Selena.
Thank you. Take care, everyone. Have a good one.
Thanks, everyone.
Thank
See you
you.
next week.
All
Looking
right.
forward to
Bye-bye,
graduation.
everybody. See
See
ya.
you next week.
Bye-bye.
Bye-bye.